Hi, everyone, and welcome back to Stephan Vijay podcast, brought to you by Bold. For American listeners who want to buy and sell Bitcoin, go to getbold.io. Now, rejoining me on the show is one of my longtime friends in the Bitcoin world, and literally, I believe you were the second guest on the show after Safety, is Vijay Boyapati, the author of The Bullish Case for Bitcoin. Welcome back, Vijay.
Hi, Stefan. It's great to see you. Yes, I prize my second place slot after Safe. Such a great person to go behind that feel very honored and glad to be with you again.
Yeah, great to chat. And of course, listeners always love these episodes, hearing your insights. And I think you have a really great perspective of kind of staying balanced even in the bull run and the bear cycle, because people sometimes, I've noticed that's a tendency. People, the natural kind of human tendency is to kind of overhype in the bull and then feel overly bad during the bear. And if you can just consistently stay, decently bullish on Bitcoin all the way through, that seems to work. So look, there's a lot of things going on. I would say, here we are. As we record, it's the 30th of April, 2025. Bitcoin, we sort of recently hit this top of like 109K or so. Then we sort of hit a bottom around 75K or so. And some of that was maybe the tariff stuff and just kind of economic uncertainty. And now as we speak, we're about 94K. I want to get your kind of just overall sense of where things are right now. Where are we in the cycle per se?
I feel like we are in this particular cycle. Still do feel like we're early. We're not at the start, but we're still early. I don't think we've seen that kind of FOMO panic to buy moment. I think one thing that's so important, I always try to remind myself, is we're students of monetary theory and history, and we should be trying to understand what's happening, not so much trying to predict what's going to happen. And Larry Summers, don't exactly subscribe to his school of economics, but he had a good quote in a recent interview where he said, geologists and seismologists know more about earthquakes than anyone, but that doesn't mean they necessarily can predict when the next earthquake is going to happen, right down to the minute. And I think that's very true for economics. We want to understand the causality in economics, what X causes Y, but we can't always know what the magnitude of the causality is. It's like, I'll give another example. It's like if you light a match in a forest, there's going to be a fire, but you don't know how big the fire is going to be. And predicting how big it's going to be is based on a whole bunch of different variables, like the wind and the dryness, and that there are other factors that are involved. And I think that's true here with making predictions about where Bitcoin's price is going to be. I know people love models like stock to flow and the recent one from Giovanni. But I really caution people that we don't know, because the future is inherently uncertain. We seem to, just as students, we seem to be going through cycles, and the cycles look similar, but that doesn't mean they have to be the same, right? And I feel like if we look at this cycle, it already feels quite different to past cycles. We haven't kind of gone through this, fairly smooth parabolic rise. It's been more like uh, a big rally, then a long pause where the market just goes sideways for like 8 months. This happened in 2024 when, anticipating the launch of the ETFs, the markets rallied a lot. They rallied from like 16,000 up to 35, 40,000, and then didn't do anything for 8 months. Just kind of chopped sideways for 8 months. That's pretty abnormal, compared to past cycles, because in past cycles, what would happen is the market would rally, then there'd be a crash, but then it'd come back very quickly. And if you drew a line of best fit, it was essentially a parabola, a very neat parabola with some volatility around it. That doesn't seem to be happening right now. So we had this 8 month consolidation, which actually, if you were in the consolidation, I tweeted about this, it actually felt brutal. Like the peak to trough of that consolidation period was like a 30% drawdown, from, I think it was 72K down to like 58K or so. And so if you were living through that, you'd be like, oh man, the bull market's dead. This is this is terrible. We're not going anywhere. It doesn't feel like a previous bull market. Then Trump gets elected, and in the anticipation of his election, the market rallies all the way through inauguration and does a huge jump from like 70,000 up to like I think about 109,000. And then everyone started feeling, and I confess I felt this too, we're going to hit 150K in like a few weeks. Like this is, when the bull market really starts. And then what happened? Went through another chop, and we're going through the chop right now. And it felt brutal. Like people like, oh my goodness, we got down to 77K. But actually, that's almost exactly what the drawdown in the previous chop was. And if you look back at that chop, it's just kind of a sideways movement. If you just kind of zoom out, it's like it wasn't that big of a deal. It was just going up and down in a kind of range. And we're doing the same thing now. I feel like we're in a really good spot in that range. I think Bitcoin has tested the lows, and when there was extremely negative sentiment, almost like COVID level distress in the market, Bitcoin didn't drop that far. I think the peak to trough drawdown was about 30%, which is not that much historically compared to other bull market drawdowns. So I feel good. I feel like we've tested like extreme pessimism in the market, and Bitcoin weathered that. And it also seems to be decorrelating or decoupling from the stock market now, and coupling with gold, which I think is a good thing. I think gold is in a multi-year bull market, and that I think is going to continue, because gold is part of a much bigger macro story in terms of the world monetary order. And I think seeing Bitcoin start to correlate to gold is very encouraging.
Yeah, interesting. And as you say, gold has obviously had a big run recently, but I will point out on a 10-year basis, gold is something like 11% per year. So it's even with this huge run up recently, even that is, we could make the argument that it wasn't enough to keep up with the monetary debasement, right? Because if you look at, as an example, Matthew Mashinsky's work over at Porkopolis Economics, where he does his quarterly base money update. And if you look at base money, right, so physical cash and coins plus central bank reserves, that has been expanding at something like 12% per year if you average back to 1969. So when you really stop and zoom out, it's like gold is only, you could argue, is keeping pace with that, but it's not actually beating that. Whereas Bitcoin is actually beating that on a longer term basis. Of course,
Yeah,
Bitcoin only has 15, 16 years. But go on.
that's a good point. I will push back on it a little bit. I think Bitcoin outcompeting the growth in the monetary base is part of, there are two factors there. One is the growth in the monetary base, as you say, but the other is that Bitcoin is growing in adoption. I think gold has already, already has macro scale. And what I would say about gold is it exhibits the same kind of hype cycles that Bitcoin does. It's just over a much longer period and much more elongated. And gold has this same phenomenon that much of the gains happen at the end of the cycle. So even though gold looks like it's just keeping pace or maybe slightly beating the growth in the monetary base, when the gold bull market really picks up, you could easily expect that it doubles or triples in a short amount of time, right? That's what happened in the 70s with gold. And I think it's important to think about that and factor that in terms of the returns for gold, rather than kind of the early part of the bull market, if that makes sense.
I see. So you see it like there's a bit more to go in gold, whereas
Oh,
other people are
I
maybe.
definitely, yeah, I definitely think there's a lot more to go in gold. I think this is a secular bull market. I think, and bull markets in gold can last a decade. The bull market in the 70s lasted a decade. The bull market in the 2000s, from like 1999 up to about 2011, that's a decade of just gold consistently going up. I would say the bull market in gold is probably 3 years old, so I could see this going for a lot longer, and I think it ties into this much bigger geopolitical story, which is the breakdown in the Bretton Woods monetary order. And the Bretton Woods Agreement was crafted in the 40s, post World War II, to create a new monetary system which made the US the global monetary hegemon. Like the US had the reserve currency, And it's breaking down for a couple of reasons. One is that the US has become more nationalistic and is saying, hey, we don't like what this has done. Having the reserve currency has kind of created this incentive for us to spend money freely and inflate our currency, but our manufacturing base is fleeing out of the country and going to places like China. And there's some, strategic risks of having that happen. Whether you believe in free markets or not, it is kind of scary as the United States if all of your manufacturing power is in China and you can't build any weapons yourself, right? If you get into a conflict with China, what do you do if they're the ones building the weapons for you? The other factor is other nations are looking at uh, the US behavior managing this monetary standard and saying, hey, wait a second, this is kind of scary. Like the US can they can freeze our reserves that we are holding in US dollars or treasuries at any moment, as the US did with the Russian reserves. That's a really scary thing as a sovereign nation to think about, right? You have your monetary assets that you might want to deploy in an extreme situation, and then suddenly the US decides it doesn't like you and it freezes your assets. I think that is a part of why nations are starting to think, hey, maybe we need reserves in something else. And I think that they're turning to the traditional historical reserve that countries always kept, which is gold. You keep your savings in gold, and I think you're seeing central banks around the world accumulate gold. They haven't kind of gotten to the idea yet that they should be accumulating Bitcoin. Some, very few nations have. That'll happen in time, but for now, I think the story is really gold focused.
Interesting. And you mentioned your comments around gold. As you said, it seems like you could arguably say maybe it's a central bank led run in gold, at least for now. It's maybe not as strong of a retail focus on gold, at least for now. Maybe, who knows? But I guess I'm curious as well. If you were to, let's zoom out. Let's say in 10 years' time, you know, could you see gold, let's say, hit a double in that time? But do you think it's going to beat fiat debasement in that time, or do you think it's going to sort of keep pace with?
I think what happens is in the last stage of a bull market, gold will outperform the debasement. It will just kind of go parabolic. But gold is already huge, so parabolic for gold might be a 2x or a 3x or a 4x. Gold is not going to do what Bitcoin would do in that scenario. Like Bitcoin can do a 10x from here easy. That's totally possible. I think it's very, very unlikely that gold could do a 10x because it's already a $20 trillion asset. A 10x gets it to 200 trillion. And then I guess the only scenario in which gold could do something like that is you have a global catastrophe. Like global trade shuts down completely, central banks are just hoarding gold, everyone is trying to hoard gold. It would be a bad scenario if gold did a 10x. It's not something we would all be celebrating. I mean, maybe if you held gold, you'd be celebrating, but you'd kind of be a king over ashes. It would not be a fun world to see gold 10x.
Yeah, whereas a Bitcoin case is a lot more optimistic. So maybe we could make that argument that gold is kind of like a pessimistic asset to hold in a sense, and Bitcoin is more like an optimistic asset that actually it represents better cooperation and better, development and growth prospects. So therefore, we should feel good about the rise in Bitcoin.
I think Bitcoin up to this point is really mostly an adoption story. It's more and more people adopting Bitcoin. I think Bitcoin as an inflation hedge is not really the right story to think about. It might be a narrative. It might be something that, the media and commentators talk about where they say, oh, inflation spikes so people are interested in Bitcoin. But I don't think that's the real story. The story is just like people saying, I want some of my savings in Bitcoin. I just want to. Then regardless of other macroeconomic factors, like just that adoption story alone makes sense because the global adoption or penetration of Bitcoin is still single digit percentage, right? There's still a lot of room to run. Gold, I don't know. I think gold is kind of where it's going to get to in terms of adoption, but its movements are much more macro based. It's central banks and hedge funds trying to anticipate central banks making the moves. It's not like there's a big adoption story. It's not like kids today coming out of school like, oh man, I want to adopt gold. I want to accumulate some gold and put it in a lockbox in a bank. That's not really a thing. Whereas I do think that is a thing for Bitcoin.
For certain. And also there's that dynamic of even, let's say, rich boomers, when they, let's say, pass on and pass that wealth down, it's probably very likely that the millennials and the Gen Z who they pass it down to, they might sell that gold and say, I'd rather hold Bitcoin instead.
Yeah, that's a funny story because my dad, he thinks like a boomer, and he's obviously from India, grew up in India, and has that gold bug gene in him. And for my for four kids for their wedding, he put aside some gold coins for them. So you can imagine, you know, 15, 20, 25 years from now, when they get married, it's their wedding, and I give them these gold coins, they're gonna be like, Dad, what the hell is this? And it maybe gold's still valuable then, but I agree with you. Their first instinct will be like, I'm gonna sell this shit coin and I'm gonna get myself some more Bitcoin, or I'm gonna pay for the wedding. I mean, that was the idea, that he was giving them gold so that it could pay for their wedding in the future.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This episode brought to you by Galloy. They are building banking software for the Bitcoin age. So if you are with a bank, a fintech, or a startup looking to offer some kind of Bitcoin product, whether that is a Bitcoin collateralized loan, deposit accounts, or payments, Galloy can help you. Their latest product is called Lana. It is a loans management platform, and you can use this to come to market quickly and offer a loans or Bitcoin collateralized lending product for your customers. Now, Galloy have a lot of experience in the space. They started with Blink Wallet in 2020, and they've since grown this to become a community favorite over time. And so they have a lot of experience making things work in a secure, reliable, and scalable way. So if you need assistance coming to market quickly with a Bitcoin banking product, such as lending or deposits or payments, talk to the team at Galloy. You can email them. The email is biz@galloy.io, or go to the website galloy.io. And now, back to the show. Yeah, and I guess one other zooming out sort of macro thing, I'm curious to get your view on this, right? As we speak today, Bitcoin is a little bit under a 2 trillion asset. Call it a 2 trillion asset. Gold is something around 20 trillion-ish, right? And let's say Jesse Myers, aka Croesus, has this chart that's kind of, very popular, or Michael Saylor is showing that as well, showing this kind of 900 trillion. And in that sense, you could say, look, Bitcoin is 2 trillion in a world of financial assets, 900 trillion. Do you agree with that kind of framing that, Bitcoin is going to sort of suck a little bit out of each of those other things, whether it's property or stocks or bonds or gold? And I guess the other question as well is, do you think 900 trillion is a good overall estimate? I guess I've seen different numbers there.
Yeah, I think that's a much longer term story, whether Bitcoin becomes a reserve asset of the world. And if it does, it will start sucking monetary premium out of various things like art and real estate and stocks, and probably most significantly government bonds. They'll lose a lot of their monetary premium. But I am really laser focused on what I think is the most obvious bull case for Bitcoin. And I have been, since almost the beginning, which is this is better than gold. It is obviously better than gold. It has all the attributes that make gold great as a store of value, but it has ones that significantly improve on gold by orders of magnitude. So transportability, assayability, like verifiability. You actually know you have real Bitcoin instead of with gold. There are a lot of tungsten coins floating out there and tungsten bars. There's a lot of fraud in the gold market. That case, that 10x, I'm satisfied in my mind of just thinking about that. I think the case from achieving and then surpassing gold's market cap to becoming a reserve currency, that is a long-term story, and I do think it's still fraught with a little bit of uncertainty. We don't know what path that will be. So I'm happy to focus on the 10x, which I think is something that is achievable in the relatively short term. I see that as a 5 to 10 year story, Bitcoin catching up to gold. And after that, I think everything else is gravy. I think the world changes dramatically with Bitcoin as the same size as gold, that everyone on earth has the ability to keep their savings in something that can't be debased, and they can take their savings anywhere they want without anyone's permission. That already changes the world for the better. I'm very hopeful that Bitcoin becomes the reserve currency of the world as more and more people accept it and realize it's a permanent feature of the world. But I just, that path is less clear in my mind, how we get there, how we get to the reserve currency step. Because nation states have to give up one of the most important powers for us to get there, right? They have to give up control of monetary policy. And it's almost like saying nation states giving up control of their militaries. That's a tough one. Most nations are never going to do that. So, but maybe the people in these nations demand it. So I just don't know how it happens, and I want to be honest about that. Whereas when someone says, what do you feel confident about? I feel very confident that Bitcoin is going to surpass gold's market cap. And I'm happy to say to anyone with my full conviction that makes Bitcoin one of the best asymmetric bets on earth. A 10x on an asset this big, which has been massively de-risked. It's far less risky than it's ever been. That is the bullish case for Bitcoin. Everything else is gravy.
Yeah, I see. And I mean, even if we're throwing around these numbers, right? Let's say in maybe 10 years' time, Bitcoin hits a 10x. So call it $1 million-ish. At that point, though, gold might have already hit a 2x. So even then, it might not have actually completed the flipping. It might not have flipped gold yet.
It's like Zeno's paradox. Every time we catch up, it moves a little bit. We're just constantly trying to catch up.
But maybe, let's say, after that in the next 10 years, maybe at that time, that's when the Bitcoin flips gold, and that's when it sort of goes to that really next level. But as you said, we don't know. It's hard to predict. 15, 20 years out, we don't know. And so I'm also curious to get your thoughts as we are looking at, what's going on in the market. There have been different stories and different narratives that played out. So I guess if I zoom out and just kind of very high level, 2013, there was kind of this narrative of, Cyprus bail-ins, right? And that was kind of a big, the bank bail-ins, and that's why Bitcoin. Now, even if it wasn't necessarily true that, okay, all the Cypriots were going to Bitcoin, that was kind of a narrative. And I think maybe, so that was 2013, kind of, if I had to very oversimplify. And then 2017 was kind of, this kind of shit coins and ICOs and, CME futures, right? That was a big, big narrative that year. CME futures is coming.
Well, the institutions are here. That was another one.
Right, in 2017, right, which was obviously a bit early. And then in 2021, we sort of had, kind of DeFi, NFTs, and, Tesla adopting, and of course, MicroStrategy adopting. And again, people were saying institutions are here, but maybe they weren't quite. And then this cycle, we had, the US Bitcoin ETF in 2024. And now the other big one that I think is worth discussing and understanding is this phenomenon of Bitcoin Treasury companies and Bitcoin strategy companies, or Bitcoin treasury operations companies, or some people call them LBEs, Leveraged Bitcoin Equities. So Are you seeing that? Is that the big new thing? Is that the thing that we have to try to understand? Do you have any reactions on that?
Yeah, I do think it is a big source of demand at the margin. I think the ETFs were also a big increase in demand at the margin. And I think Bitcoin's price has always been related to sort of the reliability and size of the liquidity channels to Bitcoin. So you go back to 2013, following these narratives that you've given. 2013, what was the liquidity channel to Bitcoin? It was Mt. Gox.
Mount Gox and
Yeah,
like Bit
it was,
Instant and
yeah,
and
it was
some peer to peer
incredibly,
stuff. Yeah.
yeah, incredibly unreliable and difficult to use. And if you're in the US, you'd have to wire money to Japan, and it was really genuinely difficult to get Bitcoin. Then 2017, you have Coinbase, and it becomes relatively easier to get Bitcoin. Coinbase is more reliable than Mt. Gox, but it would go down whenever there's like peak volume, so it wasn't perfectly reliable. By 2021, I think you had some financialization, and what you had was a lot of lending platforms and options platforms, things like Deribit, and so you did have more liquidity. And then this cycle, the ETFs, I really do believe are a game changer because it opens up this massive pool of retail capital. That doesn't mean that all of that retail capital is going to go into Bitcoin at once. But if you look at the example of gold, when the ETFs for gold were launched in 2004, gold went on a very significant run for, I think, 4 years. Every year it was up like 20 to 25%. And a lot of that was retail flows coming through the ETF. And I think the big thing that happens with the ETF is that now that we've got this channel from the pool of savings of retail clients in brokerage accounts and things like that, when the FOMO moment happens, the amount of liquidity that can flow into Bitcoin is just ginormous. It's much, much bigger than it's ever been. And I think that is what hasn't been fully appreciated. Bitcoin's much bigger, so people think the law of large numbers means it can't go up quite as much. But the countervailing force is that the liquidity pipe to Bitcoin is larger and more reliable than it's ever been. So that's one factor. The other factor is that you have, like you say, these companies, these Bitcoin treasury companies, accumulating steadily without selling at all. And MicroStrategy or Strategy is the classic example of that. What I find interesting is that it's taken this long for for the light bulb to go off and be like, hey, why don't we do that? MicroStrategy was a nothing company. No one knew what MicroStrategy was. No one knew who Michael Saylor was. Now he's like one of the most famous CEOs on earth, and his company is worth, you know, tens, or I think it's maybe 100 billion now. I mean, it's much, much bigger because he saw that there was an asset that was important, and he could. What he really understood is that there's a premium to stocks, a monetary premium to stocks, by being listed on public exchanges. Why is there a premium? It's because you have all of this passive money flowing into the stock market regardless of anything. Like people putting money into retirement accounts, 401ks, they're not looking at the individual price of the stock. They're just, money's just flowing into the equity market. And so it has this premium. And Michael Saylor realized, hey, why don't I use that premium, this kind of irrational monetary premium where people throw money into stocks regardless, and take that premium and put it into Bitcoin, which is a really hard asset where the supply is limited. And that was his first insight. Actually, going before that, his first insight was, hey, I've got this pile of cash that my company has generated. Just put that into Bitcoin. Then he was like, hey, I can sell equity. I can sell MicroStrategy shares, acquire Bitcoin, and then people like that, and my stock price goes up, and I can do it again, and I can keep doing it, and I keep accumulating Bitcoin. Then the biggest insight he had was, wait a second, there's this huge premium in the bond market, which is even more irrational. And so he taps the bond market by creating convertible debt, which allows people who are in the bond market to get exposure to Bitcoin. Bond funds can't directly buy Bitcoin. They can't go into the market and buy Bitcoin because they have legal mandates that say they can only invest in bonds. So Michael Saylor gets around this and says, "Hey, I'm going to create a bond. You can buy this bond, but the bond is really just a wrapper around MicroStrategy, and MicroStrategy is just a wrapper around Bitcoin." So he's created this product which allows uh, the bond market, the premium in the bond market to flow into Bitcoin. So now we have all of these gigantic liquidity channels from retail, from the equity market premium, and now the bond market. They can all flow into Bitcoin. And what I think this means is that if and when we get to a FOMO moment, it will be crazy. We could do something similar to 2017, even at this scale, where we could see potentially a 10x in Bitcoin, because people just get insane FOMO. Um, so yeah, my only surprise really on this whole thing is why it took so long. Why so many companies didn't look at MicroStrategy and say we should do that. And it seems like that's starting to happen now. I've heard of all sorts of companies popping up. There's the one over in Japan. There's GameStop. I've heard of one in Canada that's starting soon, which is just a play. There's 21 that's starting, the Cantor Fitzgerald Tether one. Um, and so now it's game on. This is like the game theory part, which gets really exciting. Everyone's like starting to play the same game, which is like, let's see who can get Bitcoin the fastest. And then eventually retail is going to wake up and think, holy shit, what is going on with Bitcoin? This is what happens with retail. It's dumb money. Always wakes up at the last stage of the bull market and then FOMO's in. And you'll know it, and all the old-time Bitcoiners will know it because they'll start getting messages out of the blue from people who I haven't heard from in like 5 years saying, "Oh, tell me about Bitcoin. Should I get some Bitcoin?" But we're not there. We are not there because if you look at interest in Bitcoin just by search volume on Google, we're at like multi-year lows. People are not really. This is not like a big story right now. So I think this bull market, if we use a baseball analogy, I feel like we're in the third innings out of nine innings. We're not at the beginning, but we're not even in the middle, let alone the end part, the FOMO part. So I'm super excited about this bull market because we have this infrastructure built out, and the liquidity channels to Bitcoin have never been so large and so reliable, and have not been tested fully. Like they've not been maxed out in the way that, how in 2017 when we were getting to the parabolic phase, Coinbase would keep going down. Like the liquidity
Right, yeah.
channel will keep breaking,
And
right?
people couldn't even sign up on the exchanges, right? Because there was just that much demand to sign up, and all the big exchanges couldn't even handle it at that time.
Exactly, and there were these huge spreads between the exchanges because like it was such an inefficient market. The current liquidity channels have not been tested because they're so big. It's like this super highway with like 10 lanes, and right now only like two of the lanes are being used. So it would be really kind of exciting to see what happens when it does fill up and you have the full flow of capital into Bitcoin, and to see what that will do to price.
For sure. I want to add a couple of reactions to what you're saying. So, on other companies playing copycat, I think maybe there are some reasons for that as well. It could be that some of those other companies either were waiting to see other people do it and for it to be successful, not just for the first one, but for others. Maybe, and I think the other line maybe some of them had is like, oh, that's only going to work for Michael Saylor. It won't work for us. And now it's almost like people are starting to believe, right? You know that the Morpheus Matrix, he's starting to believe, like people are starting to believe, oh, wait a minute. Actually, yeah, there are ways to do this, not just in America, but in other countries around the world. And so I think that is maybe that's something that is changing, and that's something that we're starting to notice now. So it's not just MicroStrategy, it's Metaplanet in Japan, it's that blockchain group in France, I think there's one in the UK, there's one in Canada starting, Maple Strategy, I think they're called.
Yeah, Maple Strategy, yeah.
And XXI or 21 in the US, and I'm sure there are many others that have not come to market yet or announced publicly yet. So we're going to see, I think, more of that. And I guess the other question, I'm curious to get your thoughts. In past cycles, shitcoins or altcoins were seen as the levered play on Bitcoin, right? The idea was that, people would buy these shitcoins thinking, oh, it's going to pump harder than Bitcoin, but be careful because it's going to also dump harder than Bitcoin. maybe treasury companies are sort of going to play that role a little bit now, because they will be like a levered play on Bitcoin. And so, maybe there won't be as much excitement around shitcoins.
Yeah, I won't say, I won't guarantee it won't happen, because like this idea that people are just degenerate gamblers always comes up at the last stage of the bull market, and that may still happen. But I do think there are some really important factors which are going to minimize it. One is that there's this huge problem of unit bias in past cycles, where people will look at the price of Bitcoin and say, oh, it's like $5,000. Like, I can't buy one Bitcoin. I'm not going to buy one Bitcoin, but I can buy a lot of Litecoin, or I can buy a lot of ETH or XRP because it's cheaper. Like, completely irrational idea that the unit price is what determines whether you should buy it or not. Now we have ETFs, and the unit price of an ETF is much, much lower. So someone can look at IBIT and say, $50, I can buy some Bitcoin. Like, that's easy because I can get like 10 units of IBIT. The other thing is, the other thing that absorbs the kind of degenerate speculation is, now we have a very deep, liquid, and reliable options market on Bitcoin that's available to everyone. Deribit's available to people outside of the US, but people in the US now have access to options on Bitcoin through their brokerage accounts on IBIT. And options give you all the degeneracy that you could ever want. You remember the 100x perp trading on BitMEX back in the day? You can do that now with options. You can do 100x, buy a way out of the money call and put a ton of money into it, and then if Bitcoin does do a 5x, you'll just that's incredible leverage. You will become wealthier. You'll fund your posterity for like 10 generations. so so that's available for people who have that gambling instinct. They don't need to go outside of Bitcoin anymore. And I think those two factors actually are a pretty good explanation for why the mother of all shitcoins, Ethereum, has been doing so poorly. It's just run out of narratives. All the speculative demand can find a place in Bitcoin now. And Ethereum is at, like, I think a 7 or 8 year low against Bitcoin, has just consistently been going down for like 3 years, or about 3 years. And it may actually get down to the ICO level, which is, the lowest in its history. Uh, I think that's a great sign. It's a sign of the maturing of the market, and I think it's healthy that speculation is around Bitcoin. The speculation actually is with shitcoins. I would say it's harmful to the overall ecosystem, because those shitcoins are not going to exist. They're eventually going to die, and so that's capital just like bouncing around in this casino. I will say, however, speculation around Bitcoin is valuable, even if it's degenerate gambling, because it increases the liquidity of Bitcoin. Even if people are playing these crazy options trades, that feeds into the liquidity of Bitcoin and allows people to buy and sell large chunks of Bitcoin without moving the price as much. And that's basically what liquidity is. Can you do a block sale of, say, $100 million of Bitcoin and not shift the price very much? You can't do that with a shitcoin. You can't go to, the number 6 or 7 shitcoin and drop $100 million in and expect that the price will stay. The price is going to tank like 20 or 30%. Whereas Bitcoin is deeply, deeply liquid, and that's part of what makes it attractive. If you're a nation state, for instance, you want to be able to get in and out of Bitcoin without moving the price too much. You don't want this thing called slippage. So I would say that this is the degenerate gambling moving to Bitcoin is not a bad thing. It is ironically a good thing. It is creating liquidity around something that is valuable to humankind.
Yeah. And as you said, I think the speculation coming into more Bitcoin and Bitcoin flavored, Bitcoin denominated things is a good thing for Bitcoin growth. But of course, you have to be wary and, of course, understand all the typical, things we'll say, like not your keys, not your coins, and all of those aspects of it. But nevertheless, zooming out and analyzing from an economist's perspective of, okay, this monetization process, it's part of the monetization process. It's just part of the process of Bitcoin growing up and becoming the money of the world someday that many of us believe that it will be. Now, Uh, any other? I guess the other question people might have around the levered, Bitcoin companies, this question of mNAV, right? mNAV is this kind of the multiple of the net asset value. I'm curious if you have any thoughts on that. Like, is that the kind of thing that you're expecting that with some of these companies it will sort of, again, expand in the bull cycle and then contract again in the bear markets? Or is it sort of like we're just early, so right now things are a bit more crazy with some of these numbers? Or is it more like, no, actually it's justified in a sense because look how crazy the CAPE ratios are for normal stocks, right? PE ratios for some of these stocks are also really overvalued too.
I think mNAV is, maybe this is controversial with people who are big fans of MicroStrategy, but I think mNAV is basically irrational. I think the idea that you have a premium to your underlying assets, I think that will compress over time with competition. Like the more people who are doing exactly what MicroStrategy is doing, that's they're competing on mNAV. Like mNAV is a great thing for MicroStrategy. The larger that is, the more Bitcoin they can accumulate, right? They just sell more equity. And when other people offer the same product with a lower mNAV, that's going to, at the margin, drag demand away from MicroStrategy. And people say, oh, the mNAV on this other MetaPlanet is like only half of MicroStrategy. They're doing exactly the same thing. I'm going to put my money in MetaPlanet. And so over time, that's going to compress the mNAV. It reminds me a little bit of the premium on GBTC. Do you
Right, so
remember?
that's like the new GBTC premium trade.
It's the new GBTC, and GBTC actually was incredibly harmful. It both accelerated the bull market, but was incredibly harmful at the end of the bull market. I mean, it was associated with a lot of scams, and like a lot of these lending platforms were doing this arbitrage trade.
Right, or even
Where
3 Hours Capital. Wasn't that the reason
three
they blew
three
up? It
hours
was
capital
because it
blew
went from
up.
a premium to a what's the reverse word? But it was a negative premium.
Yeah, exactly. Yeah. And when that premium went negative, that was actually a really good sign to be cautious. And hey, maybe this is the end of the bull market, because what people were doing with this arbitrage trade was that they were borrowing Bitcoin or buying Bitcoin. A lot of people were buying Bitcoin and they were putting it into Grayscale. They were giving it to Grayscale, and then it would get stuck at Grayscale. There was no mechanism for it to get out. So they were creating spot demand, buy Bitcoin, put it into Grayscale, and then because there was a premium 6 months later, they could sell, and that extra premium was like kind of the profit that they would get from the trade. But what this was doing was hoovering up Bitcoin all over the place on the spot market and putting it into Grayscale where it was stuck. I think this mNAV thing is actually quite similar, where you have these companies using the mNAV to hoover up Bitcoin, and at least in the case of MicroStrategy, they're not selling the Bitcoin, so it's like a one-way absorption of Bitcoin. It doesn't come out and it's no longer traded, which obviously will move the price up over time. I think people should pay attention to the mNAV, and like if MicroStrategy's mNAV goes negative, which it totally can go negative. It's totally possible for it to go negative. If that happens, then that's a big warning sign that the bull market is near the end, and that people should be a little bit more cautious. But I will say that when that happens, that's when you're probably going to see the most retail FOMO. It's when you're going to have people piling into Bitcoin, which is, that there's two countervailing things that might also drive the mNAV of MicroStrategy up even more. So this mNAV, the story over time is that it's going to compress. There's going to be more competition. It seems like the market has woken up to what Michael Saylor has done and said, hey, this is like a good thing for us to do as well. And whenever you have your competition, you have compression of margins. And here, the compression of margins is the equivalent of the compression of mNAV.
Interesting. Yeah, and I guess there's different arguments here to be had because, again, coming back to that 2 trillion out of 900 trillion, you could say, well, there's still this huge, bond market and equity market to tap. But I think I still agree with you overall that we're gonna see this dynamic of mNAV up and down in bull and bear cycles. And there's different arguments around this too. Like I've heard some people say that it might make sense for them to I'm not 100% sure on this, but I've heard or seen people talk about this idea that in a negative mNAV scenario, they might actually sell Bitcoin and buy back company shares to be to kind of bring it back to one.
Yeah, the danger
If they're
there is
negative.
if they start going the other direction, they try and arbitrage the other way, then they're going to start hurting the price of Bitcoin. And that could create a negative feedback where mNAV people panic and the mNAV goes down even lower and they start selling more Bitcoin. Uh, I think the right thing for Michael Saylor to do, which he seems to have been doing, is just never sell Bitcoin, continue to buy Bitcoin. If it ever happens that he sells Bitcoin, then the market's confidence in his strategy being kind of accretive of Bitcoin goes away. Uh, so I think it's much better for him to accumulate Bitcoin, and then if mNAV goes negative, to just kind of sit on his hands and wait it out and wait for the next bull cycle and do the same thing again. Which is, it seems like that's exactly what he did. I don't believe he sold any Bitcoin between the 2021 cycle and this
Yeah,
cycle.
I
It
think there
seems
was one moment where I think it was like a tax loss harvesting thing, so they immediately sold and rebought something like that. So like they did technically sell a small amount, but it was like I think it was like a one-off thing, and I think they were net accumulating because they might have done it together with something else. I can't remember the full detail though, so yeah. But yeah, interesting to see, and I guess we'll just kind of have to see what happens there on the mNAV front. But I guess the question will be, can they sustainably achieve Bitcoin yield over the longer term, right? Because that's the whole premise of this stuff is, can they get more Bitcoin per share over time? I guess that's the premise, and will that be proven out? And, we'll see.
I think it'll become progressively harder as the competition from other people doing it. I am shocked that he has been able to accumulate such a large percentage of the total Bitcoin supply um, without the price moving much more. Because what I thought was that as he accumulated more, the price would start getting ahead of him. And so he would never, in percentage terms, he would never be able to get to 2% of the supply. I think he's above 2% of the supply now. Uh, at some point that will kick in and it will become progressively more difficult. And I think people who have been in Bitcoin long enough understand this idea where, they're stacking sats, and over many years they realize that the vast majority of their Bitcoin came from their first few purchases, because the price gets
Diminishing
ahead of them.
returns, yeah.
Yeah, exactly. And that will happen for MicroStrategy too. It's a question of when that really kicks in.
Right. Yeah. I think that's fair to say. And I guess there'll also be this dynamic of, because they're already so big, it'll just be harder to grow as a percent. So there may be some of these smaller ones, like a Metaplanet as an example, has been able to achieve very, very high Bitcoin yield because they're starting so small, because they're coming off a smaller base. So that will also kind of be a competitive dynamic between the different Bitcoin Treasury and Bitcoin strategy companies, I guess.
This idea, we're talking about it in terms of companies, but I want to point out that this idea will come to individuals as well. I have a friend working on a startup. I don't want to do the big reveal here, but suffice to say that he's working on a startup that brings Michael Saylor's strategy to individuals and allows them to deploy the same strategy in accumulating Bitcoin. And I expect that startup will launch in the next 2 to 3 months. And then people will be able to do the same thing Saylor's doing in their kind of individual financial world. So I think a lot of people are going to start trying to replicate what he has done.
Interesting. Yeah. All right. Well, yeah, I'll look forward to seeing the announcements of exactly the mechanics of that, because I guess up until now, individuals simply cannot access those markets, or at least not for that price, right? It's that these large public companies can tap these debt and equity markets at a far cheaper price than you and I as individuals can do. And I guess historically, a lot of people have found cheap credit from, mortgage, things like redraw equity, this kind of thing.
You're anticipating the idea. So
Oh, well, okay. Well, let's see what happens. But yeah, I guess we're going to see what happens there. And I guess one other topic I know you were keen to chat about, we don't have a lot of time left, but AI. I know this is something you've been thinking about a lot. It's been a big phenomenon recently. AI or LLMs and all this stuff. So do you want to just give us kind of a brief overview? How are you thinking about this stuff and what does it mean for society?
Yeah, so my background is in machine learning. Actually, I did my thesis when I left college. It was in using machine learning to classify text documents into like categories. Actually, very simplistic stuff compared to what LLMs can do today. Uh, I was always very skeptical of this idea that we would see a computer pass the Turing test in my lifetime. Very, very skeptical. I was skeptical that the developments in artificial intelligence really represented any kind of major breakthrough. They really felt like optimization problems, like image recognition or text classification or playing chess. They all felt like optimization problems. They didn't feel like they had any kind of intelligence. And I do think that we have seen some kind of uh, qualitative shift in what has happened, and we have actually passed the Turing test. The test being that if there was a veil between you and a person or a computer, and you couldn't tell whether you're speaking to a person or a computer, that's the Turing test. That's the test of intelligence. I think we can safely say that LLMs now would be able to pass that test with most people. I think so. I've gone from being a skeptic to being honestly astonished and thinking that AI might be the most. I know it's so easy to get hyperbolic about this stuff and to sound kind of crazy, but I really do believe this could be the most transformative thing we've ever seen economically. And I kind of think of it as like an industrial revolution on steroids, like 10x more profound than the industrial revolution. Already you can see that knowledge work is getting disrupted in a big way. And I'll give you an example. Uh, I got a tax opinion from a legal accounting firm on on this kind of very esoteric subject that most tax attorneys don't know anything about, and it cost a lot of money. It cost many thousands of dollars. Uh, and they gave me a response, and it was pretty good, and had a lot of citations, and explained the tax theory in a way that I understood. Then I was like, hey, why don't I ask Google Gemini? And I asked the same question, and it gave me exactly the same answer with more detail, more nuance, and more ability to kind of poke and prod and ask questions around it. And it was 10,000 times cheaper. 10,000 times cheaper. Like the potential to see hyperdeflation over the next few years is enormous. And it's going to start with these kind of knowledge professions like the legal profession, where people are going to be like, why am I going to pay for a legal opinion when I can go to an LLM and get a legal opinion that's just as good and cost $20? And I think that's going to put a huge downward pressure on the legal profession. It's going to happen with medicine. It's going to happen with any kind of information generation, any profession where they're like doing PR or anything like that. You don't need to hire some fancy PR firm. You can get at least to generate like the content. You can get an LLM to do that. But eventually, I think what we're going to see is this is going to move into the physical world as well. So even if you have like a blue collar type job, like you're a carpenter or you're a plumber, even those professions are going to get disrupted, because I think robotics is only a few years behind with the LLM and the sort of artificial intelligence of the digital realm is. The physical realm is going to catch up very quickly. And part of it is because um, there's going to be a huge acceleration in development. We're talking now about firms which don't need software engineers to build stuff. The LLMs are writing the software. And I encourage anyone who has got any kind of interest in building a website or building an app, like go and try one of these LLMs and try and build it. You don't need to be a software engineer at all to get stuff built. That What that will do to productivity is it's hard to underestimate. It's hard to overstate how big a boost in productivity that's going to be. So that's going to accelerate the development of robotics as well. I think it's not inconceivable that within 5 years from now, I think, mark it on your calendars, 5 years from now, we have quite intelligent robots in our houses doing things. Like, go get me a coffee, or sweep the floor. So even these professions which involve like physical interactions, I think could be disrupted in the time horizon of approximately 5 years. That This is science fiction type stuff, but I don't think it's crazy. I think we're on the precipice of a huge revolution in production. And what does it do when you have this? The biggest factor or most expensive factor of production is human labor. It's always the most expensive. What happens in a world where you need far less human labor because you have robots doing everything? Everything faces hyperdeflation. What you see with technology now, with iPhones and computers, and things that constantly dropping in price, you should expect that to be across the spectrum. There might be some examples where counterexamples where you have a lot of government regulation where it's hard to disrupt because for regulatory reasons. But everything else, I think you should think that we might start seeing hyperdeflation in these other areas. So I think AI is a huge economic shift that we're about to see in the world, and I like to think of like, what does that do to money? How does that affect money? When you live in a world of hyperabundance, do you need money? If you lived in the sort of theoretical world of Adam and Eve where you have everything you want, do you need something that is kind of an intermediary to trade, like the medium of exchange? Do you need it anymore? I believe the answer to this question is yes. You do still need money because another factor to production beyond human labor is time. Things always take time to produce. You cannot remove time as a factor of production. It takes time to move material from one part of the earth to another. So even if the cost of the labor is much, much lower, it still takes time to accumulate the various factors of production together to build something new. And because there's time, there is a cost to it. There is a real cost, and so you still need money to represent that cost and the trade-offs of using one material versus another material. There are also things that hyperabundance cannot really solve immediately. For instance, beachfront property. Like, people will always want beachfront property, and so there's still scarcity in the world. I do think over a long enough time horizon, if we have like millions and millions of robots doing all the work, you could even remove that kind of scarcity. You could just create new beachfront property, and you live in a place where they've done that.
Well, in the UAE, yeah,
Yeah,
there's Palm Jumeirah and Palm Jebel Ali, right? And they make islands man-made.
exactly.
Yeah.
You can have as much beachfront property as you want. Everyone can have beachfront property, and if human labor is no longer a factor of production, it's all done with robotics. That's possible. You could potentially have cities which are much, much bigger because it's much cheaper to produce them. Imagine a city like Manhattan, except where the skyscrapers were 10 times as big. Uh, we are on the precipice of something really big, and how it's going to affect the world, I think it would be really good for all of us as students of economic history to go look at the Industrial Revolution. It was incredibly disruptive. It increased the standards of living dramatically, but in terms of like if you had a business, it's scary, right? Going through a period of hyperdeflation, you've got competition coming from all sides. Margins are constantly being compressed. You have to like fight really, really hard to keep your business alive because of all the competition and prices going down. I think we're going to see that on a grand, grand scale over the next 5 years.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Coldcard hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, interesting. Yeah, I think I agree with a lot of it. I think what we're at least starting to see now, and I'm hearing this when I talk to developer friends, they're saying, look, I can multiply my impact, right? Or they might have a team of 5 who are doing the work of 50, because now they're just using these, these coding AI tools to help them kind of, maybe it can't do everything, but it can kind of really speed up and make things more efficient. Maybe we're going to start to see like small to medium sized companies that can like play with the big boys, right? They can compete with large companies now because they're using AI to sort of amplify their impact compared to, let's say, some large bureaucratic company that's kind of bogged down in either regulation or just kind of internal company policies and things like this. So it's really interesting. I think the other big thing, and you were sort of touching on some of this, is there will be social consequences to a lot of this, right? There's going to be job losses. It's going to change the way people are educated. It's going to change the way government interacts with businesses as well. I just think there's just going to be so many social changes, and that is going to be a very weird thing to navigate over the next, call it 10, 20 years.
Nick Carter had a good tweet about this where he said people ask him for advice on what to do for their career going forward, and his advice is basically learn as much as you can about artificial intelligence and how to use it. Nothing else will really matter. I mean, you touched on education. We live in the greatest period of history for an autodidact. Anyone who wants to learn anything, you sit down with an LLM and start asking it questions. It's such a magical experience. Like I gave that example of that tax opinion. Within half an hour, I became a deep expert on that very arcane area of tax policy. I was just kind of asking questions, and what about this, and what about that, and how does it apply to this other scenario? And you can become an expert in a subject very, very quickly if you have the curiosity to just sit down and start asking questions. So education is going to be upended. There are many, many professions that are going to be upended. And the thing is, we can't fully anticipate what the social consequences of that are, but it will be very, very disruptive.
One other question that people might be thinking is, look, what about this hallucination thing, right? Sometimes these AI LLMs, they just make things up. Are you seeing that, or do you see that like people, the people who develop these models are going to find ways to fix them, and in the same way that, search engines, maybe, Google had a big innovation at kind of showing you what you actually wanted to see. Maybe there'll be AIs that kind of find a way to reduce this hallucination issue.
I think these problems are being fixed so rapidly. The rate of advance of the LLMs from even like a year ago is just unbelievable. Like the problem of hallucination is much less significant today than it was a year ago, and I think that'll continue to advance. I will say that these LLMs excel more at knowledge-based tasks than they do at reasoning-based tasks, where you really have to think about something. Like you have to understand the underlying causality, or like mathematics, for instance. You should try this on Google. I asked Google, is 3x the same as 300%? Something growing by 3x is the same as 300%. And it started out saying no, and then it ended up by saying yes. And it literally contradicted itself. And it's an example of where it's not so much a knowledge-based task, it's a reasoning-based task. You have to think about like the underlying mathematics, and it wasn't able to do that. I think that will improve very quickly, though. I think reasoning with AI will be human level in 2 to 3 years. But right now, the knowledge stuff is already surpassing humans. Like the LLMs are equivalent to effectively the smartest person on earth on every subject if it's a knowledge question. Um, Reasoning, I think we're still going to have to wait a few years. But you're talking about programming as well, and how you can have teams which are smaller because more of the coding can happen from the LLM. Eventually, you won't need any like engineer. You'll just say, I need this piece of software, go and build it. The rate of improvement on generating code is so rapid that I think that you'll have whole teams disappear in some of these big companies because you'll be doing it with LLMs rather than using those teams. Or it might be one manager managing like 2 or 3 AIs instead of having a team of 50 engineers. So I guess my advice would be, computer science as a profession is much less attractive today than it was 20 years ago when I finished college. The risk that there isn't a real job there in 10 years from now is very, very high.
Interesting. Yeah. And I think one area that some people might push back is, well, what about, okay, it's one thing to kind of hastily code something together, vibe coding or whatever, but then actually what about bug fixing? What about maintaining? What about kind of making sure it works with the other pieces of your software stack? Do you think, again, similar to the hallucination thing, like this is just early issues? Or another one people might say is, the context window. Okay, it's only so much context window that can fit inside this LLM. Therefore, you still need certain humans to kind of manage it. But again, are you saying, would you view that similar to the hallucination thing, where this is just an early thing, eventually it is going to surpass those things?
Yeah, when something improves, say 5x or 10x a year, every year, these problems just disappear. Like the problems of hallucinations were significant like a year or 2 years ago that at least in my usage, are effectively gone. There are still problems in reasoning. I gave the math example, but I think those will be gone in a few years as well. The rate of progress is just astonishing. And like I said, I started off as a skeptic, and the switch flipped for me, I'd say like 6 months ago, and I realized, hey, this is a really, really big deal. They still do have some problems, but I think those problems are going to get ironed out very, very quickly. And it's also because like the tools that they are building to improve these models, they can build them faster because they're using the models to write the code. And Mark Zuckerberg talked about this, like they're building this whole tech stack just to accelerate their progress in improving the models. So it's like a feedback loop almost, in it's getting faster and faster.
Do you have a question? Do you have a take on whether AIs will use Bitcoin? Or I've heard another interpretation is more like, no, actually it's more like whoever the owner of that AI will choose, right? What currency. If you have a smart fridge, it's not that, it has to select the currency. Maybe you select, I want to use US dollars or I want to use Bitcoin or whatever. Do you have a take on the AI and Bitcoin question?
I think a lot of work will be delegated to AIs in the future. And I think that you're going to have different AIs that need to communicate value to each other. And there is no better mechanism for transmitting value on the internet than Bitcoin. Bitcoin is the native currency of the internet. And I think that AI will actually provide a lot of demand for Bitcoin in the future. Even though we will live in a world of, I think, hyperabundance, as long as we don't destroy ourselves, that's the other part of the story that we may not have time to talk about. There's a big risk that the development of AI is the great filter, and the great filter is the answer to the Fermi paradox of why we don't see intelligent life in the universe. We get to a level of advanced civilization where it becomes so easy to destroy ourselves because we've become too powerful. That's a real risk. I really, really worry about that. But if we figure out a way to not destroy ourselves, we'll probably live in a world of hyperabundance where these AIs are communicating value to coordinate with each other, and that value is transmitted using Bitcoin.
Awesome. I guess, kind of the impact of AI on the state as well, right? Think about welfare, retirement, Ponzi systems that, nation states of the world are using today. Do you see an impact there? Like, do you think, like, okay, so here's the typical argument. It would be, look, these welfare states are a Ponzi. they're unsustainable. There is not enough new young people being born, i.e., TFR, total fertility rate, is low. It's below replacement in many of the well-developed economies around the world. And therefore, that's going to be a problem for these welfare states. But I guess in an AI abundant future, does that actually change?
Yeah, it does, and it's kind of it's sad and it's ironic that these states which have been so irresponsible and gotten themselves into debt, that in a traditional world or developing economy, that they would eventually go bankrupt and face a lot of hardship. But in a world of hyperabundance, the problem of debt effectively goes away when you can produce things for nearly free, because you can pay for that debt. I mean, the thing that solves a large debt burden, if you're a country which has a lot of debt, is production of stuff. If you can produce a lot of things, then that solves. You can service your debt. And when you have AI, you have almost effectively infinite production. So it could be, looking. People might look back on this and think all of those countries were the rational ones because they went into debt to buy themselves a little more comfort until they got to AI, and then the problem of debt just went away. It would be very it would be crazy, it would drive us Austrians crazy to think that something like that is possible. But I think you have to be honest, it is possible. And in a world in which you have robots doing everything, debt is not a problem anymore.
Yeah, interesting. So I guess the question then is more like, how quickly will this AI abundant stuff come? Like, will it come in 5 years' time, or will it come in 25 years' time? Because if it comes in 25 years' time, there'll still be some, problems on the way there. But if it comes in 5 years' time, well then, yeah, probably not a big issue, right? Like it'll just be so productive and so abundant that it won't matter that much.
5 years from now, we'll see meaningful changes in the way things work in the world. 25 years from now, we may not recognize the world. It will just be completely different. Like if you were to transport you and I 25 years into the future, we'd be like, holy shit, like this is so crazy. I cannot imagine. Like maybe we do have cities which are 10 times bigger, or maybe like it's just such an accelerant to everything. If you get to an AI system that it has reasoning and can advance not just production in an engineering sense, but advance science, it accelerates everything, and the world could be just transformed from that. Like for instance, I think self-driving cars is something that is right on the horizon. Like they are. I went in my first self-driving ride in the Bay Area.
Oh yeah, like a Waymo or
A
yeah,
Waymo, yeah.
yeah.
Went in a Waymo, and that was another moment where I was like, "Holy shit, this is much closer than we think." Um, it's like that saying, like the future is here; it's just unevenly distributed. You can go to the Bay Area and see some of those things, self-driving cars and robots and flying machines and all of these things, which I was very skeptical of. I think we could see all of that stuff on a 10-year time horizon. And I think sort of the way things work in the household could change very quickly within 5 years with robotic advances in robotics.
Yeah, it's fascinating to think about. And yeah, I think one other thing that comes to my mind is when you read, let's say, sci-fi or whatever, and I'm sure you've done, when we were kids or whatever, when we would read sci-fi, and it would be so advanced. And then by the time we actually got to that year, we weren't there yet. Like Marty McFly has a flying skateboard, and, we don't have that now. But, maybe it's kind of like we were just a little bit behind, and then eventually actually we sort of caught up to what some of those early sci-fi writers thought we would have.
Yep, yep. And actually, some of them were kind of behind in a sense that they wouldn't predict some of the abundance that we would have. But yeah, it's going to be very interesting to see whether our future looks like a sci-fi future 5 years from now.
Yeah, fantastic. All right, well, I guess that's pretty much all we have time for. Not sure if you have anything you need to promote, but of course, check out the book, The Bullish Case for Bitcoin, and anywhere that you want people to follow you, Vijay.
Thanks, Stefan. The other last thing I want to say, and we didn't get a chance to talk about it maybe next time, is quantum computing. I think is something that folks should pay attention to. The risk profile of Bitcoin is far different today. It's de-risked in many, many ways, but there is one important risk that I think especially the Bitcoin core developer community should pay attention to, and that's quantum computing. I think people need to focus on finding a solution to this as quickly as possible. Even if it's 5 or 10 years out, the market will begin pricing it in much, much earlier than the actual threat of uh, certain addresses being breakable by quantum computers.
Yeah, and I think there's more to come there. I know there are people like Hunter Beast and others out there who are sort of really pushing on that front. So definitely, I'll need to get him on at some point and talk to some of the people who are really domain experts in that field as well. All right, well, thanks very much. A great chat, and looking forward to seeing you soon.
Thanks, Stephan.